Hi everyone, welcome to my new channel on FIX Protocol. If you're curious about the tech behind financial markets, or you're a trader or support professional wanting to learn how FIX Protocol systems talk to each other, you're in the right place. Today, we're diving into something called the FIX Protocol, one of the most important tools in electronic trading, but often one of the least explained in simple terms. So let's break it down. No jargon, just the basics. If you have any comments or questions over this series or further videos, please add them below and I hope you can take something away from this. FIX stands for Financial Information Exchange. Think of it like a language, but instead of people talking, it's computers at trading firms, banks and exchanges sending each other messages. These messages help systems talk about orders, prices, trades, in a super fast and structured way. Each message follows a standard format, like a recipe. This way, both sides know exactly what's being said. But here's the fun part. Firms can customize this standard based on what their system or business needs. These changes are documented in something called the System Specification Document, which needs to be read and understood, and would be available from your system provider as a tool to understand the system better. You dev guys could also the system provider for Data Dictionary, which would certainly assist you when building your messages. Normally, this is in *.xml format and should be in line with message structure detailed in the FIX spec. Now, if your company wants to use FIX, you don't just download an app, you have to build your system to speak FIX as a minimum use FIX. Version 4.4, this means writing code that can send and receive FIX messages and understand what each one means. You might be on the buy side, like investment fund firms, or the sell side, like brokers or banks. Either way, the way your system is built will depend on your business goals and objectives. It might sound complex, but if you enjoy working with APIs or back-end systems, this is where things get exciting. Of course, there will be additional requirements within a program of works to include system connectivity with servers, data centers, databases, system admins and architects to ensure system efficiency and security is at its best. Thereafter, the trade prices, orders and trades will need to be recorded and monitored for regulatory and risk purposes, which will become evident through this series. A great place to learn more is the FIX Trading Community website. It has great info and resources for all levels. Also, check out FIXimate, which contains a dictionary or guidebook for FIX messages. Super useful when you're trying to decode or build message structures. FIX messages within server logs can often contain special characters, tag delimiters that make values hard to read by human eye, and some computer applications as fonts can be unrecognizable. I often copy FIX messages these into TextPad and replace these characters to become pipe vertical bar character, which can be read. If you're a developer or a tech support person, ask your provider for a FIX data dictionary. This helps you understand the tags and values used in your system when you add this to your VeriFIX or MiniFIX tools to construct your FIX messages. Once your system is built, it's time to test it with your platform provider via a certification test. This is to check your system follows the rules, uses the correct FIX version, tags and values. This needs to be checked for both parties sending and receiving these messages. Client side needs to ensure they can accurately process these, and system side need to be sure you're sending us correctly formatted messages, which will not cause disruption to system resources. This step is very important. It's like getting your driving license before you go live on the trading road. A few tips to remember. FIX is standardized, but your firm's setting up systems might choose to add custom fields or tags to suit business and compliance requirements. Make sure you follow any regulatory requirements in your country and where exchanges and clearing houses are concerned. Always ask your provider for the latest version of the FIX specification your system should be aligned with. If you search online for FIX specification, you will be able to view various documents to provide a realistic idea on what is being used actively in the market. They are extensive documents, but really will provide good insight into messages being supported. Not all messages need to be supported by counterparties in markets. And there you go. That's a beginner-friendly breakdown of the FIX protocol. It's the behind-the-scenes hero of financial markets. And now you know the basics of how it works. Got questions? Curious about a specific part of FIX or system development? Drop your comments or questions below. I read all of them and reply where I can. If you enjoyed this and want to dive deeper into the world of trading tech and APIs, hit that subscribe button and tap the bell icon so you don't miss future videos. Thanks for watching, and I'll see you in the next one.